Hey guys, this is Imran here, and today we're going to go over the meeting that took place on September 25th, 2019. And for our agenda, we have stocks, earning reports. And today we will learn about what earning reports are and how they can impact the stock price of a company. And this is the sixth meeting of the year. So, quick recap from our last presentation. Penny stocks are stocks that trade less for $5 a share on the public stock market. Microcap stocks are stocks that have a market capitalization of 50 million to 300 million. Mid-cap stocks are stocks with a market capitalization of 2 to 10 billion. And large cap stocks are stocks with a market capitalization of 10 billion plus. That being said, stocks. Part 6, earning reports. So, what are earning reports? Well, earning reports are reports issued by companies that tell you how much money the company has made over the past quarter, which is 3 months as we've discussed. And earning reports can help you make both long-term and short-term decisions because it can show you the direction of the company's earnings. So because you can compare earning reports from different quarters, you can see how the company's earnings are trending in a specific pattern, and that can help you in making long-term and short-term decisions. Because usually when earning reports come out, in the short term, if they exceed analyst expectations, the stock price usually goes higher, and if they don't, the stock price usually declines. So what does an earning report look like? Well, an earning report usually presents itself in the form of a 3 to 4 page document that shows a table of the specifics of a company's net sales and operating expenses. So these documents also showcase the company's financials relative to the quarter of the previous year. And as you can see here, this would be the front page of an earning report, and this is what it would look like. It would have a net sales section, a cost of sales section, an operating expense section, and much more, which we will discuss. And you can also compare to the current quarter to the current quarter of the past year, meaning if this is quarter 2, for example, then this would be quarter 2 of 2019. This would be quarter 2 of 2018, and you can see the comparison in product sales, service sales, and total net sales, and so on. So why earning reports are important? Well, earning reports are one of the most important documents that a company issues because it shows you an up-to-date version of the company's finances and operational functions. Earning reports are also important because they show you how the company has performed over the past year. Now, as we saw in the previous image, we saw how you could compare a specific quarter result from this year to the next year. And basically by using this, you can make clear-cut decisions on what position to take on a stock, whether it be buying a stock or selling a stock or just holding it in general. You can decide all that from the earning report. So, impact on the stock price. So earning reports can make a stock's price go up or down. And if the company performs better than expected by analysts, the price goes up. And if the company performs worse than expected, the price goes down. And overall, earning reports can leave a significant impact on the company in the short term. Now, as we see here, for Ulta Beauty Incorporated, we can see how their stock price plummeted by nearly 100 points, and 29.55%. And you can see this took place on August 30th. And during this time, the earning report for this company, Ulta Beauty Incorporated, came out, which is why such a sharp decline was caused. And that is why earning reports are so important and can leave a heavy mark on the stock price in the short term. Net sales. So one of the main parts of an earning report is net sales. And net sales represents the total amount of money the company has made over the past quarter. And this section tells you how much the company has made from products and services over the past quarter. So As you can see here, you can see the net sales for the company during this quarter, as long as the net sales for services during this quarter, and the total net sales, which would be the net sales of products and services combined. And it also compares the total sales for the current quarter to the same quarter of the previous year. So now, as you can see, you can compare, for example, the net sales for products for the end of quarter 2 and the end of sales for products for the end of quarter 2 in 2018. And this is very important because it can signal an important trend overall. And net sales specifics. So basically, the earning report also tells you the specifics of net sales, and this goes into the specifics of how the company has made its money by showing the amount of money earned in each reportable segment and the amount of money earned from each of their product categories. As you can see here, you can view the net sales by reportable segment, and you can see all the regions that have made sales from Apple. This is just an earnings sheet from Apple, by the way. And you can see how much they made in total, which is the total net sales, right? And you can also see how much they made per category. So you can see from the iPhone, for example, they made $25.9 billion in just 3 months' time. And then for the Mac, $5.8 billion, and so on. And this information is also compared to the previous year's quarter's net sales for each segment and category. So you can also view these same information for the quarter of the last year, the same quarter of the last year, in this section right here. So cost of sales. So the cost of sales section of the earning report tells you how much it costs to receive the total net sales for the product and service categories. So you can see the cost of sales tells you how much it costs Apple to make money off the iPhone, for example, because an iPhone would be specified as a product, right? So you can see for all their products, it would have cost them $29 billion just to basically get to their net income. And for services, you can see how much it costs in total to get revenue from their services. And this tells you the total cost of the sales, and the margin is the total net sales. The difference between the total net sales and the cost of sales. So, as we've mentioned, right, just to clear things up, the gross margin is after the cost of the sales section and tells you the value of the cost of sales subtracted from the net sales. So you do net sales minus the cost of sales to get your gross margin, and that's how much profit is left. And operating expenses. So earning reports also go into depth into the operating expenses the company faced during the quarter. And operating expenses represents the expenses the company had to face while carrying out certain day-to-day activities aside from product and service expenses. So you can see some examples of operating expenses are research and development, selling, general and administrative expenses, and then by adding these two sections up, you get your total operating expenses, which is, as we've discussed, the expenses the company had to face while carrying out certain day-to-day activities aside from, which means excluding, product and service expenses. And investing activities. So aside from showing a company's income and expenses, the earnings report also shows you the investing activities of the company. Now, this shows you the company's buying and selling of long-term assets and other investments. So this right here, you can view all the investing activities of the company and how much they cost and how much they produced. So the numbers in parentheses, such as this number and that number, shows you the cost of buying assets, while the numbers without parentheses, for example, this number and this number, represent the proceeds, profit from investments. And below investing activities, you can see the cash generated by the activities. So this is the total cash that was made from investing for that quarter. And this is for the last quarter. So financing activities. So earning reports also show the company's financing activities. So this shows you the company's transactions of long-term liabilities and the company's activities that were undertaken for the purpose of achieving economic goals. And basically all these activities, all these included, basically everything here, were activities the company has undertook in order to achieve economic goals. And this right here, the cash dues and financing activities, you can see how much money they used, right? Because this, the number in parentheses shows you the cost of something, right? So this shows you how much cash they used in financing activities for the current quarter. So a quick recap. Earnings reports are reports issued by companies that tell you how much money the company has made over the past quarter. An earnings report shows you an up-to-date version of the company's finances and operational functions. Earning reports can make a stock's price go up or down depending on exceeding or falling short of expectations. Earnings reports have sections representing the company's net sales and expenses, and earnings reports also showcase information about the company's investments and operational costs. Thanks for your participation.